It helps if you put the sound on. I have to apologize. I'm trying to get ready for this. Hi, my name is Sally Marie Gimmon, and I am the owner of the trustisyou.com. Today, what I want to go over what the Spendthrift Trust does for you. Now, this trust is a very specialized trust. 97% of the trusts in the United States are only designed to not go through probate at the end of someone's life, and so you don't have to go to court. This is what my mom and dad have, and this is what Susie Orman talks about on TV. What I'm talking to you about today is what the one percenters of the United States have. And yes, this is only for the United States. It does come from England, so there is it's contract law, but I want to let you know what's happening here because I want you to save as much money as possible. Now, the Spendthrift Trust is legal, it's patented, and it's in the IRS code. If you want to look this up, the IRS code is 643B like boy, 643B like boy. Now, with this, this trust is going to save you in 3 ways. Number 1, it's going to save you federal taxes. Who doesn't want to save federal taxes? That's important. Number 2, it's going to keep your information 100% private. No one's going to know what you're doing or how you're doing it. That's important too. And number 3, something that I don't think about, which I should, but my clients say it's super important to them, is there will be no judgments in case you get sued. Unfortunately, living in the United States, people are very sue happy. Because this is based on the old adage by Nelson Rockefeller, you own nothing, you control everything. There's no money involved, and as soon as an attorney sees that they can't get any money from you, they go away. This has happened to 2 of my clients on different lawsuits, and I can talk to you about that if you set an appointment with me. Again, the website to set an appointment with me is thetrustisyou.com. This trust, I found out about it. I'll give you the history about this, but I found out about it, and I am now licensed to sell this trust on behalf of the private law firm to as many people as I want, and I'm going to teach you what it means. Now, the Spendthrift Trust is the overall title. There are 2 different trusts. One's a business trust for 1099 income earners, and the second trust is a beneficial trust for investors. So there's 2 different trusts. You can have both trusts if you want, or you can start with one trust and then 6 months later or 6 years later buy the second trust, or never get the second trust. I personally have both trusts. The business trust, I run 3 businesses out of it, and then the beneficial trust, I have a crypto bot. I stake crypto. I am a real estate investor. I actually have $10,000 in options trading that a friend of mine does for me for options trading. All of those taxes are all taken care of with the Spendthrift Trust. So let me start telling you a little bit about this trust. It does come from England back in when King Henry VIII was chopping off his wife's heads. He started up the Church of England. He went to go tax the lords and ladies of England to pay for his new church. The lords and ladies went back to the Magna Carta, and I'm not giving you years or what everything happens. You can Google all this. I'm dyslexic and I get things mixed up. Numbers, 6s and 9s are evil to me, so I'm not going to give you any numbers, but you can Google this. So this comes from England and it's contract law. I work for a private law firm that has the patent on this trust, and they have a trust that's turning 350 years old in 2023. This trust was before there was a United States. This is an ironclad trust, and this is what's going to happen. There's 5 names to the trust, and I want you all to know the 5 names. It's irrevocable. It goes from generation to generation to generation. It's complex. It can hold money day to day, month to month, year to year, decade to decade. It's irrevocable, complex, discretionary. Whoever's the trustee can make the rules for all the beneficiaries. I'm a good trustee. I haven't done this for any of my nieces or nephews yet. It's non-grantor. This makes the trust 100% private. Someone who is not a beneficiary and someone who you do not invest with will sign up for the trust and sign away from the trust. It's literally like 12 pages. They have to sign their name twice. When I started the trust, I used a family friend, Roy. We met for lunch, and he had to sign his name 17 times. I did not choose a good person. Roy was 87 years old. He had arthritis in his hands, and for him to sign 17 times, it was difficult for him. Worst case scenario, if you cannot find someone to be the non-grantor, I can do this for you, or somebody at the law firm can do it for you free of charge. We're not charging you to do this. This is an easy legal document to deal with. And then the fifth element is spendthrift. It has gone in front of the Supreme Court twice. Both times it's been ruled in favor of this. It is in the IRS Tax Code 643B. The Spendthrift Trust can enter into any contract legally and act on its own behalf. Now, the reason you want this trust is it is not like an LLC, an S Corp, or a C Corp. Those are statutory laws and they can get changed at any time and anyone can find your information. This is a legal vaulted trust that works on your behalf. Now, the business trust is for anyone who has a business. I don't care if you're an affiliate marketer, if you're an MLM marketer, if you have a brick and mortar store. I just talked to a gentleman who runs a pizzeria this past weekend, and he asked for more information about the trust because he's paying 1099 income. I have 3 businesses I run through the business trust. I am saving up to 70% on my federal taxes year after year after year. Pay for the trust once, and you save these federal taxes year after year after year. True story, I just talked to a gentleman last week who is an affiliate marketer. He is in 14 different countries. He has a huge downline everywhere. He's getting paid by 1099 income. That's the key. 1099 income, and he's starting the trust. He makes $40,000 a month. A month. I'm like, I would like to be making $44,000 a month. Good for him. So again, 1099 income, you would be using the business trust. Here's something I have to say up front. Anyone who has a W-2, this trust will not help you. Now, with the beneficial trust, this is for investors. And just to give you an idea, I do have, actually there's 4 of them. One just retired. I have 4 clients who are actually teachers who are real estate investors. What they're doing with their real estate goes through the Beneficial Spendthrift Trust. What they're doing as teachers, they have to deal with, they have to file their own taxes. When you have the Spendthrift Trust, you are going to be filing a 1041 tax return, a federal tax return. If you are set up correctly, that's all you're filing is a 1041 tax return. I am filing a 1041 tax return. I'm living in North Carolina right now, and nobody knows I'm in North Carolina, and I will not file state taxes for 2022 in North Carolina because I'm doing everything through the Spendthrift Trust. I love it. Now, for the Beneficial Spendthrift Trust, it is going to save you taxes in 5 ways. First, capital gains, interest income, dividend income, rental rolls, and royalties. All of these taxes are deferred year after year after year after year, and you'll never have to pay them. So I'm going to go over them a little bit equally. Capital gains. I'm going to read this statement to you. It comes from the IRS, and I want you to know this completely. So this comes from this comes from IRS Tax Tip. I'm sorry. I should have had this all set up for you correctly. Did I take it out? IRS Tax Tip 2003-29. This is from the IRS. Almost everything you own and use for personal purpose, pleasure, or investment is a capital asset. Talk about broad. It's a huge broad topic. So short-term capital gains is up to a year. So if you're a fix and flipper, if you're a wholesaler, if you're doing auction houses, anything like that, short-term capital gains is 23.8% on your profits. That's a lot of money. How I got involved with this trust, true story, back in July of 2020, I took down the deal of the week in my real estate group. It was a bank-owned reverse mortgage. The woman had passed away. It's a house in Rocky Mount, North Carolina. I was living in Phoenix. I paid $20,000 for this house. I was told when it went to auction, it would go for $50,000. Woohoo! Yay, Sally. I'm going to make $30,000. Sally knows capital gains was going to be over $7,100 because I was going to sell it at the auction. Well, it was a North Carolina property. I got schooled, and this is why I'm here now. In North Carolina, they have a very odd rule here called upset bids, and it went through 7 different upset bids, and instead of being $50,000, it went for over $64,000. Yay, Sally. Sally made over $64,000. Now, because I have this trust, I originally bought it in my LLC. I did have to do a two bill of sales. One bill of sale said my LLC sold the property in Rocky Mount, North Carolina, to me, to Sally Gimmon, for $1. Second bill of sale said Sally Gimmon sells Rocky Mount, North Carolina property to the trust for $1. I drove to my bank in Arizona. I got it notarized. I scanned it. I sent it to the attorney in Raleigh, North Carolina. The next day, he sends me an email back and he says, I need the first page of your trust. I scanned that, sent it to the attorney in North Carolina. Because I did all that work, I'm going to be honest, maybe an hour, maybe 2 hours. Let's call it 2 hours of work. Because I did 2 hours of work, I saved $15,310 on that one real estate deal. It was worth it. It was so worth it. That's short-term capital gains. So anything you're doing for less than a year, it's 23.8%. Now, there is past legislation. Back in November of 2021, there's past legislation to raise capital gains for some tax bracket, making $400,000 or more. They're going to raise that up to 40%. Yikes, 40%. You're a smart investor and you're making capital gains, short-term capital gains. They're going to, if you make $10,000, they're going to take $4,000 because you make more than that. That has not gone into effect just yet, but it's coming down the pipeline. I'm not making $400,000 yet, but I plan to. Oh boy, do I plan to. I'm a real estate investor. I'm going to be a accredited investor. Now, long-term capital gains. This is something more than a year, and I can't tell you the difference between 15%, actually 0% is for nonprofits, I'll be honest, 0% is for nonprofits, or 15% or 30%. I am not a CPA. I wish them well. Again, I'm dyslexic. Numbers are bad for me. 6s and 9s, they get transposed. 3s and 8s get transposed. 1s and 4s, woo! I don't know what happens. If you know my cell phone number, I have a cell phone number from hell. So long-term capital gains is going to be 15% or 40%. True story. One of my customers was selling a family restaurant, a 42-year-old family restaurant in Kentucky. His son saw a TikTok video, said, hey, Dad, look at this TikTok video. Dad contacted me. We had to talk to his business broker. The business broker had to change the name on the letter of intent and change the bank account. Because Jim did this, he and his wife saved $450,000 at least. Or they saved $600,000. He doesn't care. He's going to save this money. He sold the restaurant March 15th. He wouldn't pay those capital gains until April 15th of 2024. He sold it March 15th, 2022, and he's saving $450,000 or $600,000. As he says, I'll save this money. I'm happy about it. So this is very important. If you're long-term, if you're holding a house, one of my clients had a house for 4 years. A renter finally was going to buy it from him. We knew he was going to save at least $16,900 at 15%. This starts adding up year after year after year after year for long-term capital gains. Whatever you do on this. Now, so in real estate investing, I don't care what you're doing. If you're a passive investor, if you're in a REIT, if you're wholesaling, if you're wholetailing, and I know, y'all are going to say, you can do a 1031 exchange. This does away with that crazy timeline. You still can do the 1031 exchange and you're kicking a can down the street. You're going to pay those capital gains sooner or later. With this trust, you're going to do away with the timelines and you'll never have to pay those capital gains again. True story. I have clients. He's 78. She's 76. They had an auction house they bought down in Tampa Bay for $300,000. They did $100,000 of upkeep in it. They were selling it for $1.2 million. The wife, who was a real estate agent, Vera, she knew about the 1031 exchange. You have 45 days to find a third party, and then 160 days, if I have that wrong. And it was a headache for her. She contacted me and she goes, "Can we put this house into the Spendthrift Trust and then save all that money?" And I said, "Yes, you can." So what they did, they saved all this money, and now they're involved in a REIT where they're getting 12% interest per month. Easy peasy. They sit on their back porch and drink mimosas in the morning and say, "Sally, I just made 12% today, the first of the month on her doing this for not doing a 1031 exchange." Easy peasy. This is what the Spendthrift Trust does for people. Now, the next three things that are going to be happening are all going to be either 10%, between 10% and 37%. Different tax brackets. I can't tell you what your tax bracket is. You'll have to ask your CPA or look at your 2022 taxes. Interest income, dividend income, and rental rolls are between 10% to 37% tax bracket. All of those on your federal taxes are deferred year after year. Interest income, true story. One of my clients, he's in Texas. He has 85 houses, been real estate investor for 10 years, kept going to his accountant going, he's doing the BRRRR strategy, buy, rehab, refinance, rent, redo. He's doing the BRRRR strategy, and in 2021, he paid $135,000 in interest income. That's a lot of money. Forex investors, you're getting taxed twice. Interest income and capital gains. You need a spendthrift trust. So my client, he grilled me. Got him an appointment with the trust attorney, and he's like, yes, your interest income will completely take care of this. So this is what he did. He started the trust. He did have to change the deed on all 85 houses. So what he did was once a week, he sent 10 houses to his title company in Texas, changed the deed. So now he's saving $135 in 2022, $135,000. $135,000, 2002, 2003, 2024, 2025, 2026. It doesn't matter. He's got this trust. It's going to go from year to year. Congratulations to him. Dividend income, true story. One of my clients, his dad left him a very nice portfolio. 100 shares of the top 100 dividend companies. So in 2001, every quarter he went on a nice vacation with the $60,000 he was getting in dividends at the end of first quarter, second quarter, third quarter, and fourth quarter. Then he got his tax bill. He's just like, Sally, help me. We got his financial advisor, Jules, on the phone, and she did have to change electronically all the stock certificates into the trust's name. Now he's saving $60,000 per quarter or $240,000 a year in dividend income. Congratulations to him. Rent rolls. Another client in Texas, a lot of clients in Texas, unfortunately, has 7 rental houses. He is making over $7,000, $7,400 in rent rolls per month, which is, I want to say, $83,000. If I have the numbers wrong, I have to apologize. He knows he's getting charged 27%, against between 10% to 37%, 7 different layers in between. We know he's at 27%. He is saving $28,430 every year with the Spendthrift Trust in his rent rolls. Still going to take depreciation, still going to take if he has to replace the water cooler, if he has to replace carpeting or anything else, still take all that off. But he's saving $28,000 year after year after year after year. So what he's going to do with that savings is he's going to get an 8th house first year, a 9th house the second year, a 10th house the third year. Again, you can do whatever you want with this money that you're saving with the Spendthrift Trust. So those three, interest income, dividend income, and rental income, all are charged between 10% to 37%, 7 different layers. You have to figure this out. The 5th way, royalties, is a little bit cheaper. It's 10% to 35%, 7 different layers. Royalties, I don't care if you're an author, you're a songwriter, you're a musician, you're an actor, you're a playwright. NFTs, if you're doing NFT artwork, NFT crypto, NFT real estate, all of this is going to be charged between 10% to 35%, 7 different layers. This trust will defer those taxes for you year after year after year. I have a client, an NFT artist, kind of an interesting thing she's doing. She did a picture, sold it for $1,000 in the meta world. Congratulations to her. She's like, oh, that was easy. I'm going to make it a series of 1 to 100 pictures, $1,000 per picture. First picture, that's 1099 income. Picture number 2 to picture number 100, she's going to make $99,000 on those taxes. She now has 7 different series that she's doing this, and she's going to save over $163,000 on her taxes for 2023, $126,000 in 2024, year after year after year. These are just examples of what this trust will save. Now, I do want to talk to you about being sued. These are two cases that actually did happen. One of my clients has Airbnbs. I have been to his Airbnb down in Sierra Vista, just outside of Tucson, Arizona. Amazing house. It's A-frame, all glass, and then the house is like built into the mountain. It's a different house you've ever seen. This happened Memorial Day 2022. He's up in Grand Rapids clearing out a hoarder house. He had to use 7 huge dumpsters to clear out this hoarder house. He gets a text message from someone saying, my daughter is doing your Airbnb in Sierra Vista. I fell and broke my wrist, and I'm going to sue you for everything you have. Brandon calls me. I'm in North Carolina. He goes, what the heck do I do? I'm like, Brandon, calm down. Where's your trust booklet? And he goes, I travel with it. It's in the back of my Jeep. I'm like, wow, I don't travel with my trust booklet. I said, when the attorney contacts you on Tuesday, get the information, take it, scan the first page of the book, send it back to the attorney. The court case went away. Well, Brandon is an inquisitive human being. He went after the person who sent him the text and found out she did this to 8 other Airbnb hosts in 2022 and sued them for $100,000 for falling and breaking her wrist. She had her attorney involved and she had her doctor involved to change the paperwork, and she was getting paid $100,000 by all 8 different Airbnb hosts. I don't know what kind of person does this. I don't do this. I don't know if you do this. I'd be like, oh my gosh, I have guilt over this. But this is what her job was, and he got to save that money. Another client has 100 plus doors in Chicago. When he started with me, 100 doors, he's saving so much more money. He has a very large RV that you need a bus license for. Over the summer, he was driving it. He and his wife go to different national parks. He couldn't slow down. Unfortunately, not going very fast, but he hit the car in front of him and pushed that car into the car in front of her. She jumps out of the car and she goes, I'm going to sue you for everything you have. My client, Patrick, I have not seen his RV, but I can tell you it's at least $250,000. He probably has the most gorgeous RV you can find. Patrick likes a nice life. She's on the freeway going, I'm going to sue you, I'm going to sue you, I'm going to sue you. The Spendthrift Trust owns his RV. The Spendthrift Trust pays for the RV insurance. The Spendthrift Trust pays for the gas in the RV. So he takes her insurance information. He takes the second driver's insurance information, pays for the cars. She tries suing him for more money. Spendthrift Trust owns nothing. She couldn't get anything else. So those are 2 cases of where they got to save from being sued. If I can help you save money, federal taxes, if I can help you save your time, if I can help you save from being sued, my name is Sally Gimmon. The website is thetrustisyou.com. My new podcast is Stop Paying Capital Gains Now. Go out there and listen to it, like it. I hope you enjoy my podcast. I try to go live at least twice a week so people can find out more about this. This is not a necessity. It is to help you save money if you're an investor or if you're a 1099 income earner. Again, the website is The Trust Is You. Thank you for listening. Have a beautiful week and enjoy yourself and enjoy life. Take care.